Sonam, good having you. Thanks so much for joining in. What's your sense, Sonam? Is this a bit of a blip in an otherwise downward trending market, or can we see a meaningful uptick for the next few days?
See, frankly, such sort of movements are very difficult to call. That said, the feeling that we have right now is that there is nothing specific that could act as a trigger for the markets on the up move, and therefore it's likely that this may be just a short spike in an otherwise downward trend that we are foreseeing. Our own sense is that the news emanating from Europe, while initially it looks as if the vote is towards printing more money. That said, the elections in Greece are going to call everything. So I don't think, considering our own internal issues on fiscal deficit and growth and the way Europe is acting, I don't think the indexes have anything much further to move on from here.
What did you make of the specific numbers, Sonam? And I'll start off not with Tata Steel because that has shown a meaningful move, but SBI, because 2 days in a row it's continued to move. The targets have been 2300, 2400. But from your clients as well, are you seeing buy calls coming in after the 8 or 9 or 10% move that we've already seen? Are people that enthused by the numbers?
See, frankly, I think people are just buying into SBI in my view, because one, it was one of the first to sell off in the PSU pack, and it was also one of the first banks to recognize the problem very early on, about a year back. So the feeling is that while problems may continue to emanate in a PNB going forward, they are less likely to do so in an SBI. So from that perspective, I think there is a churning in portfolios taking place. But all said and done, our own view is that the stressed asset issues are not over as yet for the banks per se. The cost of funds continues to remain high on the ground, and that will have an impact and bearing on people coming back to repay in a hurry. So I suspect that there may be some more amount of restructuring going on before we see some meaningful upside to most PSU banks. Incidentally, besides the fact, our top pick in the PSU pack continues to be BOB right now.
Well, now what about autos at this point? Sonam, what's the approach there between the two-wheelers and the four-wheelers?
See, from a strategy that two-wheelers are likely to continue doing better than four-wheelers, at least in terms of volume numbers, we continue to have an overweight position on the two-wheeler segment, and within that Bajaj Auto versus Hero Honda, notwithstanding the fact that there is a export lower number on exports and FY13 which we have incorporated. Structurally within four-wheelers you cannot really play Mahindra and Mahindra because there is sum of parts valuation there, as well as the agri story coming on. So we are generally not so gung-ho on the four-wheeler space. We think that if the risk of strategy continues, then two-wheelers are likely to perform better than four-wheelers.
Okay, the other thing, Sonam, is Tata Steel and the numbers thereof. What did you see in the numbers? Because the bottom line was well and truly below estimates, consolidated numbers not that great, but a bit of positive, and that was probably one positive to take away from. Anything else that you thought, and what's your call post the numbers?
Frankly, on Tata Steel and most metal stocks, I think the feeling is that the valuations are at record lows. If you look at their 10-year averages, stocks like Hindalco, etc., are below book, trading below book right now. So I think some portion of the market and investors feel that maybe this is the time to really look at these. But I would caution, because if you if you have seen the statement from the chairman of BHP Billiton about a few days back, they had a $80 billion capex, where they have come on now and said that we will take a pause and re-evaluate this and see where commodity prices are finally settling. So I think that will be a worrisome sign for most metal stocks. So from that perspective, we continue to be negative on metals, whether ferrous or non-ferrous.
Well, the steel ministry is probably hearing this. I'm just saying this, but they are saying that the steel prices are currently too high and they've called for a meeting of all steel producers. I don't know whether this means direct intervention from the government or this is just a negotiation that may happen, but they are seeking a reduction in steel prices going ahead. That is what the steel ministry is saying. Well, you know, we've heard this in many other sectors in the past, be it sugar, be it cement. Now the steel ministry is saying that steel prices, the end product prices are high, and therefore they need to come down, and they are going to have a meeting. Okay, that's an interesting one. Before we get a fundamental perspective on this one, since actually, Sonam, let's start with the fundamental perspective. What do you make of this? The steel ministry coming and saying that, hey, prices are high, we're seeking reduction in prices, and they're meeting all the steel producers.
So in one line, it cannot be good news for the steel companies,
right,
and valuations of steel companies. That said, there is also, see, this is all short-term, negotiation that keeps happening. But as I said earlier, it's broadly the way commodity prices are acting up and the way they are under pressure, and the fact that Europe is under stress, it is likely that the pressure will be on the downside on commodities, and that cannot be good news for steel manufacturers.
Some of the energy names, I mean, last week we saw Reliance Industries dip down sub 700 odd levels, touching its 52-week lows. What's the sense there with the energy giant right now, given the lack of earnings visibility?
The fact that, as you put it rightly, there is no earnings visibility. The gas output continues to come down every quarter. I mean, we all have a new output number which is down every quarter. And the fact that the ROEs of the business are not picking up. The fact that oil has started to come off. They are not able to get the kind of premium that they used to get on GRMs over Singapore GRMs. So these are headwinds for Reliance. I suspect if the buyback offer was not on, I think the stock could have further corrective action. The buyback offer by the management is somewhat giving support to the valuations. Fundamentally speaking, our own call with a 2-year view is a buy. We see about a 20% upside, but with a 2-year view. But I think in the near term it will continue to face pressure simply because there is no trigger in terms of growth.
Okay, no trigger in terms of growth for Reliance. Speaking about the other Reliance Group stocks, and before I get a chart check going from Mitesh on the Reliance Capital, just what did you make of the numbers, Sonam? I mean, the stock has reacted well, and broadly the numbers seem to be fairly decent, and it's showing in the kind of move that the stock has done.
While we do not have coverage on the stock, I suspect a lot of the good numbers was to do with the sale that happened to Nippon. Prima facie, if you look at the NBFC space in totality, valuations of most stocks are near 1.5 to 1 to 1.5 times book value, which has never, even for stocks like IDFC, that is the case. So I think the NBFC pack is facing the heat on slowdown in corporate India and the capex cycle. So I don't, despite the good numbers, etc., it seems more like a relief rally right now rather than actually fundamentally. For that, really, the entire banks and NBFC space has to move up the valuation chain and to have a bigger valuation metrics than where it is currently.